A crucial first step to achieving financial security is to set short-term, mid-term, and long-term financial goals. You're more prone to overspend if you're not aiming for anything in particular. When you need money for unexpected bills or when you want to retire, you'll eventually run out of options. You could become stuck in a cycle of credit card debt and feel as though you never have enough money to secure adequate insurance, making you more exposed than necessary to manage some of life's most significant hazards. As the world learned during the epidemic, and as many families discover each month, even the most prudent person cannot be fully prepared for every disaster. By planning ahead, you have the opportunity to consider potential outcomes and make every effort to be ready for them. This needs to be a continuous process so that you can adapt your life and ambitions to the changes that are unavoidably going to occur. Unfortunately, far too many people lack financial independence. Even in the absence of sporadic financial problems, the continual load of mounting debt brought on by excessive spending prevents them from achieving their objectives. Additional gaps in safety nets are exposed when a severe disaster like a storm, an earthquake, or a pandemic completely interrupts all arrangements. Nearly everyone runs into trouble, but these habits I'm about to reveal can help you avoid it. And trust me, if you can maintain these routines, you'll be able to comfortably achieve your financial goals. Ready? Then let's dive in. Number 1. Set life goals and make a monthly budget. How do you define financial freedom? Everyone has their own personal definition of financial freedom. For the majority of individuals, this is having the financial security of savings, investments, and cash to support a particular standard of living, as well as a nest egg for retirement or the freedom to choose any line of work without regards to compensation. Everyone wants it in general, but that's a very nebulous objective. You must be precise concerning sums and due dates. The possibility of completing your goals increases with their level of specificity. Now, write down these 3 goals. First, what is needed for your lifestyle? Secondly, how much do you have in your bank account to make that possible? Lastly, what age is the deadline to save that amount? Also, establish financial milestones at regular intervals between the 2 dates as you work your way backward from your deadline age to your present age. Put the target sheet at the front of your financial binder and be sure to write down all amounts and deadlines precisely. The easiest method to ensure that all expenses are paid and savings are on track is to create a monthly household budget and stick to it. Additionally, having a schedule helps you stay committed to your objectives and resist the inclination to indulge. Number 2. Pay off credit cards in full. The process of accumulating money is polluted by high-interest consumer loans and credit cards. Make it a point to settle the bill in full each month. Paying off student debts, mortgages, and other similar loans is not urgent because their interest rates are often significantly lower. Even yet, timely repayment of these loans with lower interest rates is crucial because it improves credit standing. Number 3. Create automatic savings. First, pay yourself. Enroll in the retirement program offered by a workplace and make use of any matching contribution benefits, basically free money to the fullest. It's a good idea to set up automatic contributions to a brokerage account or a similar account, as well as withdrawals into your emergency fund that can be used for emergency needs. The money for your emergency fund and retirement account should ideally be taken out of your account the same day you were paid, so it never even comes into contact with your hands. Bear in mind that your specific situation will determine how much money is advised to be saved in an emergency fund. Additionally, you shouldn't use a tax-advantaged retirement plan as your sole source of emergency funds because of the limitations that make it challenging to get your funds if you urgently need them. Number 4. Start investing now. People may doubt the idea of investing during bear markets, but historically there have never been a better chance to increase your wealth. Your money will expand tremendously thanks to the magic of compound interest alone, but you'll need a lot of time to see real growth. However, keep in mind that trying the type of stock picking made popular by billionaires like Warren Buffett would be a mistake for anyone other than experienced investors. Instead, open an online brokerage account that enables you to easily learn how to invest, build a modest portfolio, and automatically add funds to it every week or month. In the face of mounting debt, cash emergencies, medical expenses, and excessive spending, achieving financial freedom can be quite challenging. However, it is possible with discipline and careful planning. That is the ultimate goal. Number 5. Watch your credit score. Your credit score is a crucial factor in determining the interest rate you are offered, whether financing a home or a new car. It also affects how much you pay for a variety of other necessities like life insurance premiums and auto insurance. Because someone with hazardous financial habits is thought to be likely to also be reckless in other aspects of life, including not taking care of their health or even driving and drinking, credit ratings are given a lot of importance. This is why it's crucial to obtain a copy of your credit reports frequently to ensure that no inaccurate negative information is tarnishing your reputation. To further protect your information, it would be worthwhile to investigate a trustworthy credit monitoring service. Number 6. Negotiate for goods and services. For fear of coming out as cheap, people are reluctant to haggle for goods and services. By overcoming this fear, you might annually save thousands of lives. Bulk purchases or presenting yourself as a loyal customer might get you substantial discounts because small firms, in particular, frequently engage in negotiating. Number 7. Stay educated on financial issues. To make sure that all adjustments and deductions are maximized each year, review relevant changes in tax law. Follow market changes and financial news, and don't be afraid to rebalance your investment portfolio as necessary. The strongest safeguard against fraudsters who prey on inexperienced investors to make a fast buck is knowledge. Number 8. Maintain your property. Everything from vehicles to lawnmowers to shoes and clothing lasts longer when the property is well maintained. Maintenance is an investment that should not be overlooked because it's much less expensive than replacement. And learn to distinguish between what you want and what you need. Number 9. Live below your means. A mindset centered on making the most of less is necessary for mastering a thrifty way of life, and it's simpler than you might think. In fact, many wealthy people formed the practice of living within their means before becoming affluent. Adopting a simple lifestyle is not difficult. It simply entails developing the ability to tell the difference between goods you need and the things you want, and then making modest changes that result in significant improvements to your financial well-being. Number 10. Get a financial advisor and take care of your health. Once you've reached a point where you've accumulated a respectable quantity of money, you can choose between fixed assets like property or anything that cannot be readily converted to cash, and liquid assets, including cash or anything else that can be easily changed into cash. Hire a financial counselor to help you stay on the right path. Also, taking exceptional care of your physical health has a major positive impact on your financial health as well. The notion of regular maintenance also applies to your body. It is simple to make an investment in your health. It entails going to the dentist and doctor regularly and adhering to medical recommendations for any issues you experience. Simple lifestyle adjustments, including increasing exercise and eating healthier, can help or even prevent many medical conditions. On the other hand, poor health maintenance has adverse short- and long-term effects on your financial objectives. Because some employers only allow a certain number of paid sick days, once those days are used up, money is lost. In addition to forcing early retirement with a lesser monthly income for the rest of your life, poor health can cause insurance costs to increase and cause obesity and other dietary disorders. Alright guys, this wraps up our video for today. If you found this video useful, please do well to give it a thumbs up and don't forget to hit the subscribe button as well.